Okay, good day, good afternoon, good evening, depending on where you're at in the world. This is Wolverine broadcasting out of Ann Arbor, Michigan, US of A, for the Salvation Trading Company. Um, I'm going to present to you a slide of a follow-up screenshot from a live trade taken on earlier today, being January the 11th, 2012, from the London session. All right, so we are from the Salvation Trading Company, and here at Salvation Trading, we teach our clients how to trade forex with realistic outcomes using proven price indicators and cross-pair analysis. At any time, you can always go to our website at www.salvationtrading.com, and there you can check um, all of our live trade follow-up screenshots, and both positive and negative. You can also check out our weekly results and our monthly and yearly results at that web page as well. Okay, well, let's move on to the highlight of today's one of today's scalping trades that we've taken. Now, this is a trade on the cable, the pound dollar, taken again in the London session, and we use here three indicators that will help you to scalp your trades. We also have a daily breakout trade suggestion every day, as well as weekly trade suggestions for channel breakouts. And we base all of our trades on testing the channel, or some people call ranges. But we call it a channel breaks here, and this was a trade where we're trading within the channel. Now, you'll see here we have these dashed lines, and these dashed lines with values on them are predetermined resistance support levels. Okay, so here at 54.72 we have resistance. Then we have another predetermined support down at 54.42, and then another predetermined support down at 54.27 on the cable. Now, these again are predetermined. These are values that are sent to my clients every day. They're sent prior to the agent session, so you'll get these 24 hours in advance. And so these values were placed here prior to price even coming into these levels. So what we're looking at are those resistance support levels, and also incorporating two other indicators, one being the MACD. Okay, here's the MACD with we have our fast moving average. Here's the red. This is our fast moving average. Okay, right there. And then we have the slow moving average, which is this green. This is our slow moving average. All right, and we give you the inputs as well. Even if you come on as a trial, you'll get the inputs for these MACDs. And then the third indicator is our trend lines. We have a 60 SMA trend line here, this orange line, and then we have a 300 SMA trend line here, the blue line. Okay, so what we're looking for is how can we trade within this channel or a channel break, and get a good indication of which way this direction is going to move. Well, we know the trend is to the short side on cable at this particular time because both our trend lines are moving short. We particularly watch the blue line, which equates to a 5-minute trend, even though it's a 300 SMA on the 1-minute time frame. And so we look at this as our overall trend for scalping. And then we wait for resistance to get tested. Here's resistance again. Remember, momentum here is turning above the predetermined resistance at 54.72. So here's resistance, Here we are turning short, moving into what was resistance and retesting it to see if it's going to become support. At the same time, our MACD lines, as we go through what we our scalping entry checklist called our rules of engagement. One thing is, are we trading with the 5-minute trend? Yes, we are. Is price testing known resistance? Well, yes, it is. It tested it, moved just above it. And as the 1-minute MACD converged at extremes, we're testing the 0 line. Here we are up above the 0 line, just above it, and breaking down into it. And do we have, is our MACD line crossing over the fast-moving average? Is it crossing over the slow-moving average? Well, we identified those moving averages, and here we are. The red line crossed over the green line. There's our crossover, and here's our divergence developing. That separation between those two lines is divergence. Divergence is everything in Forex if you study your MACDs. And make sure there's no high impact news coming out, and our cross pairs fueling the plan. In this case, we had dollar strength coming into the market. The dollar Swiss moving long, so we know that we have a good opportunity for the sterling to weaken here once it breaks down through this previous resistance. And our MACD line, they're telling us that we're getting momentum. So we follow our vertical yellow line, and this is our confluence of indicators. Breaking through previous resistance, MACDs are showing us we have divergence to the short side, meaning momentum to the short side is coming into the market, and we're trading with the trend. Okay, and we have dollar strength coming into the market too. So what takes place here is we get into our trade at short cable 54.73 with a 10 pip spread, 10 pip in your spread, a 10 pip stop loss plus your spread, sorry. And we take this short until we get until we achieve our first 10 pips in our spread. So here we took 13 pips off at 54.60, moved our stop to break even, all about protecting your capital at this point. So now we have our capital protected, and we took a major position off, 2/3 off, 70% of our position off at our first target to capture our 10 pips. Now it's a free trade, and we want to see if we can get more out of this trade. So price does move right back up, but it does not stop us out. And we and so you can see the MACD lines after starting to move back up towards the neutral again, just to test resistance, and then we have price falling back down with more dollar strength coming in the market, plus sterling yen shorting. And so we can see now the cable will short further because there's our crossover again, divergence developing. Here's confirmation of divergence with a histogram, creating these valleys and showing that we do have, confirming that we have divergence. And we have then sellers coming in and pushing price down past our next level of support, where we place a 12 pip trailing stop, because we already know that we're going to be positive in this trade. Now it's just letting the market determine where our final profitability is going to be. So a 12 pip trailing stop at 54.40, and then we take our and we allow the market then to stop us out. At this point, we walk away from the trade. The pair comes down past this next level of support at 54.27, but because it's a support, price comes right back up to it. All right, price comes right back to it here. Test support, moves just above it, and stops us out at 54.34 in our final position for another 26 pips. So that's a total of a 39 pip trade at a very short time frame. In fact, we were only in this trade earnestly for about 6 minutes, and then we let the market determine where the rest of the trade was going to go. So again, that is the scalping method, and this was a live trade. There's the time frame you can see that we made the trade calls on, and a live trade, and gives you just a quick view of the channel break strategy. But again, at any time, please visit our website at www.salvationtrading.com, where you can join us for a 10-day free trial and see how we set up these trades in live trades and get the training modules that you need to help hone your trading skills, whether you're scalping or taking daily or weekly trades. Okay, thank you for your time. Please visit us, join us, and we'd love to see you then. Thanks again, and God bless.